Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hirimat, and along with me, Karunya Rao. Let's take a look at the headlines for this morning, starting off with Airtel. Obviously, that stock's hogging the limelight today. It's ringing loud, all fired up after those solid Q2 earnings. It also gets a nod for 100% FII limit, and that's got that counter in focus. Went to circuit, it broke it, then came back a little lower, but still one of the top performing stocks for today. We then have some more earnings impact. Tata Motors, of course, how can we forget? And I'm sure Karunya is going to walk us through more on that later. But it smashes estimates and Q2 loss has narrowed significantly. So that's boding very well for them. We then have more earnings on our radar today. We're going to have Axis Bank. We're going to have Titan. We're going to have L&T and DRL. So we're going to have a bunch of stocks in focus, not to be ignored. Then we also have a joint ride in the works today. We have Hero Motors in focus in top gear post that Harley Davidson deal of theirs. So that's something to keep an eye out on. We then have an ET Now exclusive. Tata is eyeing 50 to 60% stake buyout in Big Basket. So that's got their whole tech ambition in focus. We then have some IPO street info for you. Birla AMC planning a public issue of 2,500 crore. So not the UTI AMC, obviously not the only one. We also have this one now featuring. Finally, COVID scare on the global market front. We've seen a bit of a slide in the US markets, and that's amid earnings and obviously reinvigorated virus concerns. But back to you, Karunya.
Right, let's talk about what's happening in the markets. Right now, we're looking at the benchmark index Nifty 50 is slipped to the day's lowest point. 11,828 is where it's perched at, with a loss of about 0.5%. In fact, Sensex has also given up about 240 odd points, currently trading at 40,281 levels. It's only the mid-cap index at the moment which is managing to stay in the green, but the quantum of gains there is quite minimal. It's up about 0.1, 0.2 odd percent. You have the small cap index trading completely flat. The bias is towards the losers. As far as sectoral performers are concerned, it's really the autos and metals pack which is single-handedly capping the downside as far as the downtick in the market goes. But on the other hand, you have banking stocks putting some pressure on the benchmark indices. You also have Nifty Media, Nifty PSU Banks, Nifty Realty has also given up more than 1.2%. So these are the ones which are putting pressure on the market. On the other hand, 20 stocks advancing in trade as far as the Nifty 50 indexes goes, with 30 stocks declining. Bharti Airtel, solid earnings and solid gains coming in for the counter, up 6.5%. You have Tata Motors up more than 3%. Hero MotoCorp, Maruti, M&M. You can clearly see how the auto heavyweights are actually lending some amount of support to the markets. But from non-auto space, you also have a UPL which is up 1.5%. Wipro, JSW Steel, Divi's Labs, these are the stocks that are capping the downside. But on the flip side, banking stocks, like I said, HDFC Limited, top index loser right now. It's down 3%. Kotak Bank is down 2.2%. ICICI, HCL Tech, HDFC Bank, Bajaj Auto, an exception from the automotive basket, which is also sulking in trade. Let's touch base with Kunal Bothra and Gaurang Shah to talk technicals and fundamentals respectively. Morning, gentlemen. Kunal, coming to you first. Anything to worry about the markets right now, given that we've suddenly seen a downtick come by, or is it likely to be slightly volatile and largely range-bound in the run-up to the US elections and given the rise in COVID cases across the world, etc.?
So it's a mix of all of that. Currently, I believe that the markets are getting into more of a circumspect mode. And I think it's natural. I think this kind of a reaction from the market was something which was expected. You can't have the markets just about going in a vertical kind of a fashion, and that too when you're heading to one of the most talked about events for the November series. And as it is, I think the markets have done exceptionally well for the last 6 months on a trot. Presumably, if we ignore what happened in the month of September in the second half. So I think in that regards, I think it's been an exceptional market. So it's more prudent from the market participants to try and go into more of a risk-off mode heading into the elections. I think post-elections, I believe that the normal routine would probably come back into the markets. You would again watch for those liquidity cues, either stimulus cues from the US markets or some sort of domestic cues in terms of results, etc. But I think in this regards, I believe that the markets are going through a bit of chop and churn today, this being the expiry week as well, and today, tomorrow being the two crucial days for the expiry, I think that's also one of the other reasons why you are seeing this added volatility in the market. So I don't see any major reasons for a medium-term or a long-term investor to try and fret about. This could probably be a normal process of mean reversion, some process of chop and churn as well in terms of individual stocks and sectors. Now, should I go ahead with my stocks as well, Karunya? Okay, so I'll suggest two calls. Both of them are on the buy side, Karunya, and first one is the one HDFC Life. Now, this is very interesting because over the last 1 week, we've seen a steady recovery for HDFC Life from 560 levels to now 590. That generally indicates that that's a very strong demand zone for HDFC Life at the 560 mark. And I believe that this should be a gradual repair process for the stock. For two expiries on trot, the stock had underperformed. So generally, we see a reversal which happens on the third expiry for such a kind of a stock. So I believe HDFC Life could be a stock which can get into focus not just this week, but I think for the start of the November series as well. Targets of 612 and stop loss could be kept at 580. The second would be a buy on Tata Motors. I think it's a very interesting breakout on Tata Motors. So yes, on the back of results, or the expected news flow, the stock is moving up higher. But I believe that on charts as well, it's looking extremely strong, trying to end almost a 2-month consolidation for the stock price. So I think this could be a big breakout for Tata Motors, both on the back of the news flow as well as on the back of the prices as well. Would term it as a high risk trade, targets of 155, stop us at 135.
Okay. Hi, Gaurang. Good morning. What's on your radar today as far as a high risk and low risk idea is concerned?
Thank you, Varun, and morning to all of you all. So, with the FMA expiry tomorrow and the global news flows, US elections, and not to forget, I think Monday we had a deeper correction. Yesterday we had a recovery in terms of reflection of what we saw on Monday, and today we are trading with a little bit of flat to negative bias. Remain extremely positive on the markets, and like I mentioned during our earlier interactions, Varun, that all dips are a great opportunity to buy. Corrections like this are something that traders have to worry about, not investors. And we're quite optimistic that by the time we go towards Diwali, that is second week of November, we might be trading above 12,000, closer to 12,200. And not to forget, I think the Honorable Finance Minister are also given some positive indication in terms of another stimulus. So I think that should help the markets, and of course not Q2 earnings is panning out much better than what our estimates were. So two long-term investment ideas. First one is SBI Cards. We saw the IPO, we saw the performance, then we saw the correction, and then we saw the earnings for the quarter gone by, and that has actually reinforced our confidence in our fundamental coverage as far as SBI Cards is concerned. We are working with a conservative target of somewhere close to about 980, Varun. But I'm quite optimistic that on the earnings front, I would not be surprised to see the stock going towards 1100. These are fundamental ideas, so please bear in mind you need to have at least 12-16 months plus kind of time horizon. The second one is from the frontline IT pack. Again, a stellar set of numbers and continues the run rate in terms of performance. HCL Tech. Here we are working with a target of somewhere close to about 1050. And like I mentioned, if earnings improve, definitely the target gets revised upwards.
Okay, great. Thanks for that, Gaurang. So SBI Card remains a preferred pick. I think you've been positive on that pretty much from the word go. So you maintain that stance, and then thank you on that note to both of you for sharing your picks with our viewers. Let's quickly pull up the BNSN stock cloud for this morning and take a look at what's happening there. A lot of stocks in focus, obviously, on the back of very strong earnings. So let's kick it off with Tata Motors. Again, Karunya is going to walk us through a lot more on what's happening there soon, but it's been a very good result from what I understand, and the cash flow situation is improving quite a bit. Airtel, the weightage has gone up. They've got approval for FII investment, and they've also just delivered a very good result. We then have Hero Motor that's tied up with Harley Davidson to do sales here in India, so that's got that counter in focus. Castrol, very good results yesterday, profits up 8%. KPR Mills, very good results. You then have ISEC, Marico, Metropolis, Gokuldas Exports, all again in focus on the back of results. And Marico is also looking to enter a new segment from what we're given to understand, which could be very exciting for them on the revenue front. So these testing stocks like Metropolis are also in focus because of the testing. So lots going on. That's the cloud for this morning. But it's time for a quick break here on Buy Now, Sell Now. We'll be back shortly.
Welcome back. You're still watching Buy Now, Sell Now. Let's address some of our viewer queries as well. First up, an email from Avisha Dadlani of Mumbai. She's bought Infosys after seeing the good performance for the quarter gone by, and she wants to find out whether she should continue holding on to it or should she exit. Kunal, how are you reading into the technicals of Infosys? It has seen a very solid run-up if you look at the larger picture, of course. But in the last 2-3 weeks, or last 2 weeks actually to be precise, it has come off a tad bit precisely after the numbers were delivered. What is your sense now? Should she exit or should she be patient and stay put?
I think the advice is very simple, very clear, Karanya, that you have to be very patient on a stock like Infosys. I think the stock had done exceptionally well. I think from, I would say, 600, 550 levels that jumped up to 1100 plus in a matter of these 5-6 months from the March lows. But then when you look at this in the entirety, I think this is just the start of what I would probably expect that it could be a big IT rally for years to come. So I believe that if your view is long term, then I don't see any reason why you should be nervous about your investments in Infosys. In fact, I think the better strategy would be to try and use some very strong dips on Infosys if it comes by. I think that is a good buying opportunity or averaging opportunity. I think the stock, for example, comes back to say 1,000 levels, which could probably coincide with the 50-day moving average as well for Infosys. That could be a good attractive buy. And if you remember, Karanya, that I've done a chartbuster presentation on the Nifty IT space as well in the month of August end, that how the IT sector is now heading towards probably a rise where it could go back into a hurdle zone where it could stagnate for the next 3 to 6 months before it starts the cycle up. So we've seen the rise in the stagnation part, or we've seen the stagnation part for the IT space. It's possible that the IT stocks could remain a bit stagnant over the next 2-3 months as well before they start to go through one more round strong upside. So I think if you're a patient investor and time is not a hindrance to you, then I believe you should definitely hold on your investments in Infosys and look to average on dips as well.
Okay, so Kunal remains positive, average on downward days, and stay invested if you're a patient investor. Gaurang, do you share Kunal's view, and what's your take? And if you could just explain to our viewers, why has Infosys really cooled off after such a good Q2 result where all the performance gap between TCS and Infosys is kind of getting bridged?
So Varun, this goes back in history, and we had investors taking flight to safety from Infosys to TCS, and if you recollect, we had this spat between the management and the erstwhile mentors, and now of course you had a spate of resignations also coming through, but all that is now history, and with the new thought, new energy, and new force driving the company at the helm, we are quite optimistic that Infosys could be heading towards 1350. These are long-term targets. And one common mistake that all of us do is the moment you invest in a stock, you put it up in your market watch, either on your desktop, your laptop, or your smartphone screen. I think you should not do that. I would simply compare this with an investment. Suppose if you put an investment, you put your money into bank FD, you don't go every morning to the bank and ask the branch manager how much your interest is earned on that FD, do you? Similar is with stocks. Of course, it's a little bit high risk asset class, but nevertheless, it gives you highest return as well if you look at the history of all the asset classes put together 15-year, 20-year plus. So we remain extremely positive, and I would go to the extent of saying that use all opportunities on the downside to add on to the stock. And it's not only Infosys, Varun. IT sector also has corrected. Along with Infosys, other IT stocks have also corrected simply because they had gone up. Post earnings, post numbers, we always see that before numbers, the stock runs up. After the numbers has come, even if it is much above the estimates, the stock corrects on the downside on profit booking. So this is a minor blip of profit booking. Don't look at everyday movement on Infosys. If you put your money for long term, stay invested and use dips to add on to the stock.
Okay, great. I'm sure many viewers can understand the merit in that kind of an approach. Let's move on to our next query then. We have Atish Chabria of Mumbai, who's written to us. I bought Airtel at 550 rupees per share. I see a good chance of now exiting with a minimal loss. Obviously at 415 he was in 30% loss, so he's wondering if he should exit right now. So Kunal, coming to you, what do you think one should do with Airtel? It's finally recovered a little bit. Do people take their losses or their profits and leave this place, or do you definitely stay invested after you see a move like this today?
So I think today's move is probably a reaction of what happened to the results or the results reaction for the stock price. Now, when you look at the long-term charts of Bharti Airtel, 400, 390, whatever the support was for the stock price, that's been acting as a strong demand zone. Even in the March fall, we saw the stock coming back to just around that 400 mark or slightly to that 400 mark, and you saw a very strong and a stellar recovery. That recovery took a lot of stages for the stock to move up higher. It didn't happen in just one single day. So I believe that a repair process of similar nature could probably happen for Bharti Airtel from going from current levels as well. 400 has been a big support for the stock. It's been a big demand zone where the stock has been, or where there's been accumulation which has been seen to the stock price. So I think till the time the stock is trading comfortably above the 400 mark levels, I think there could be always a possibility that the stock may gradually build up. And I think if you've bought at 550 levels, I believe that using those demand zones as a buying range could be a good strategy. So I would advise a hold on Bharti Airtel as of now.
All right, Gaurang, what's your view on Bharti Airtel? Q2, the company continued to show good improvement. They've had good subscriber additions, 4G addition. Company saw strong ARPU improvement. There's operating leverage also finally kicking in. Would you advise somebody to sort of book losses and exit at this juncture, or should they wait perhaps for a few more months?
Well, let me go on record, Karanya. We have a target of 700 on Bharti Airtel. Now let us put some things into perspective. The correction started post the, great plan announced by Jio. And then, of course, you had a lot of concerns. Let us not forget that eventually you will have 2 or 3 large players in the cellular service provider sector. Jio is one of the biggest. Then comes Bharti Airtel, the second largest. And then you have the combination of Vi, which was earlier known as Vodafone Idea. So our sense is that these 2 large players, Jio and Bharti Airtel, will continue to dominate the space. They will continue to attract new subscribers as well as addition in terms of mobile number portability from weak players like Vodafone Idea if they are not able to keep up to the services and the expectation of the subscriber. Secondly, the earnings, we saw the numbers yesterday, correct me if I'm wrong, Karanya, yesterday we saw numbers from Bharti Airtel. And we also heard the management say that they are looking at 250, 275, 300 plus rupees ARPUs, that is revenue per user per month. And this is the 5th consecutive quarter that you saw strongest ever ARPUs reported. So we remain extremely positive on the cellular service provider. And with this new normal in place, Karanya, I think data revenue should add to the positivity. And I would not be surprised to see Bharti at 700, Bharti Airtel at 700 plus with a long-term time horizon. And if you did like the stock at 550, why don't you you should like the stock even more at 400 or 450.
Okay, great. Thanks for that, Gaurang. So you remain a fan of Bharti Airtel, and after a result like this, there's no reason why one should really consider booking out. On that note, let's quickly pull up the Airtel chart. Let's give you some information about Airtel and why it's really such a standout day for this stock. It's gained the most it has since the 19th of May. So that's the first thing we need to keep an eye out for, right? Secondly, the volume was more than 12x the 20-day average. So we've not seen buying like this in a very long time. There was also a consensus price target at 53.4% higher than the CMP. So that's what most of the brokerages believe. And that's a very high upside potential. Total return YTD is 3.5% and total return is 26% over the past year. So these are just some facts we'd like to bring to your attention. It's one of those very rare stocks that 100% of brokers have a buy rating on. My colleague Sunita Nagpal is going to give you a lot more information on this stock throughout the day. But let's also cut across to a bite from Nilesh Shah, MD and CEO of Envision Capital. And he's been talking about the current attractive sectoral pockets and the impact on various businesses. Let's listen in.
We're seeing data and we're seeing news about what's happening really with our GDP growth rate. And obviously, of course, this year is expected to essentially be a year of a decline or a degrowth. And so I think clearly the top priority is going to be essentially businesses which are essentially agnostic to what's really happening with the GDP numbers. And so clearly I think pharma remains our top bet, our top pick. And I clearly believe that as a sector, pharma is basically set to kind of in a way sustain a double-digit growth rate over a multi-year horizon. So clearly believe that pharma is really the big opportunity there. Second, of course, is that we're seeing very strong demand for homes and residences, and I think clearly all the businesses connected to real estate construction, be it some of the tiles manufacturers or the wire and cables manufacturers, I think that's a very interesting opportunity. So that I think would be the second big pocket. The third, I think, Nikunj, is that I'd probably want to strike a bit of a contrarian note, and I think that you're going to see a fair bit of pickup in investment in infrastructure. And I think, therefore, some of the companies connected to, say, the power sector, the rail sector, which are going to be supplying a lot of equipment and things like transformers and etc. Our sense is that over the next 2 to 3 years, you're going to see a very strong momentum there as well. So clearly, these are the three big pockets of opportunities that we see. Pharma for a double-digit growth, the businesses connected to real estate, I think will probably do well over the next year or two. And then, of course, clearly sectors or businesses connected to some of the core sectors like power, rail, etc. I think these are the three big pockets of opportunities that we see.
Okay, let's once again address what's happening on the share price of Bharti Airtel. It's styling in some strong gains. Sunita is standing by to get us in on more details about what's keeping the stock abuzz in trade. Sunita.
Absolutely, Bharti Airtel stock is on fire today, and rightly so. There are two bit of good news on the counter. If you look at NSDL has updated their shareholding FII limit for Bharti Airtel to 100%. If you recall, there was a confusion in month of August when MSCI index had cut down Bharti Airtel's weight by half, saying that the NSDL website is showing FI holding limit at 49% and not 100%, and that led to a lot of outflows from the counter. But that has been reversed, and now the NSDL website is saying that it's 100%, which basically means that MSCI index will have to increase the Bharti Airtel's weight. Analysts believe that Bharti Airtel's weight in MSCI India index can go up from 1.6% currently to 3.2%, which will translate into inflows on the counter. Analysts are estimating that these inflows could be anywhere around $500 million. So that's the kind of move we are expecting in Bharti Airtel counter. Another good news is the numbers were very, very good. The company reported numbers after market hours yesterday, and the Q2 performance operationally was very, very strong. The company had added substantial subscriber base in Q2, and the 4G customer addition at 14 million was very, very healthy. Even the ARPUs for the company had improved from 157 level to 162, which was better than expected. EBITDA margin performance was better than expected. If you look at what the brokerages are saying, they are impressed with the performance of the company. Almost all the brokerages have a buy rating on Bharti Airtel. However, the targets will be reset after the con call that the company will be doing in the afternoon today. We'll have to wait and watch how the brokerages are upgrading this stock. But for now, the stock is up and they are having a good moment.
Okay, Sunita, thanks much for those updates. All eyes on Bharti Airtel and the con call that's scheduled for later this afternoon. Slipping into a break, plenty more when we come back. Stay tuned.
Hello and welcome back to Buy Now, Sell Now. Big news for the auto sector. Hero MotoCorp has joined hands with Harley-Davidson, who is in the process to wind up its operations in India. Hero MotoCorp will sell and distribute Harley bikes in India. Let's see how the brokerages have reacted to this. And obviously, Karunya is going to walk us through all that. So over to you, Karunya.
Well, it's definitely a big news for the auto sector, given the fact that two iconic brands, one of course being Harley-Davidson, has joined hands with the world's largest two-wheeler maker, which has very strong presence and distribution network in India, and now that they will be selling their range of bikes, parts, merchandise, it's likely to actually lead to very strong synergies for both of the companies. Let me talk about what the brokerages are making of this big development. Morgan Stanley continues to be overweight on Hero MotoCorp. They've given a target price of 3,454 rupees a piece. They said that the tie-up will be a neutral to positive event for the company. They see no downside risks for sure from this development. The execution of the new tie-up will actually be the deciding factor of whether or not it leads to a re-rating for the stock price of Hero MotoCorp. Morgan Stanley is also overweight. 3,200 a piece is the target price they've given. Good strategic move for premium business scale up over time. Right now, Hero Moto rules the roost when it comes to entry-level bikes. Premium level is something that they have managed to gradually grow in a big way in terms of market share, but this particular tie-up will definitely help them augment it in a big way. The tie-up will not have a meaningful financials impact, at least for the next 2 years, says Morgan Stanley. Harley scale, of course, has been quite small in India. Their volumes are also quite small given the niche and premium segment that it operates in. So yes, definitely a big development, but one needs to see how both of the brands are able to leverage that. Hero MotoCorp, after we saw a fantastic up move on the stock price of Harley-Davidson yesterday, Hero MotoCorp looking relatively subdued, but yes, one of the top gainers on the index, up almost 2.5% as we speak. Early in the day, we caught up with Hormaz Sorabji as well to get his view on this tie-up. Here's what he said.
Hero, I think, has been looking for a partner. Don't forget, ever since they parted with Honda, they don't have a partner. They don't have a multinational partner. They don't have a partner who can give them technology. Now, obviously, Harley-Davidson and Hero, they don't quite fit. They're at two opposite ends of the spectrum. But still, technology is technology. And moving forward, when there's electrification, alternative propulsion systems, a global player generally can bring a lot to the table. And I think that's what really Hero is looking at. And I think whilst they will co-develop bikes and badge them Harley, I wouldn't be surprised if there is a deal which has not been spoken about, that on the same platform you'll even see Hero bikes coming off that. So I think it is a win-win. I mean, it's given Harley the opportunity to kind of stay in India. I think what they'll do is, I don't think they'll be assembling bikes. I think what they'll probably do is just keep importing bikes and selling them with Hero's distribution, and Hero would probably take over the sales part of it. So I mean, the fit is, from the product point of view, isn't quite there, but I think there are a lot of synergies to be had.
Okay, let's change gears from Hero MotoCorp to Tata Motors, another star performer from the auto space. The stock is buzzing away after they delivered a stellar set of numbers, given the tight cost control measures and Project Charge, operating leverage benefit finally kicking in. And of course, the commentary on JLR and PV business has also been fairly encouraging, that they are seeing a slow and gradual pickup across segments and geographies. Let me talk about CLSA's view on Tata Motors. They've maintained a buy. Target that they've given is 220 rupees a piece. Improvements at JLR have driven the beats on earnings as well as free cash flow. Margins beat, working capital correction is something that has also aided to free cash flows as well. Sequential volume recovery and cost cutting should continue, so they're betting on that. A no-deal Brexit and emissions possess potential risks at this juncture. So probably by January we'll get more clarity on Brexit related developments as well, but for now CLSA has given it a thumbs up. We also heard on the management call yesterday about how Mr. Balaji, the CFO of Tata Motors, talked about festive demand. The company, the management has been blown away. They've been overjoyed with the response that they've witnessed. Let me read out the quote as well. To quote Mr. Balaji, he said, blown away with the October demand on Navratri sales. Have seen highest ever bookings, highest ever demand. They don't even have enough production to meet the kind of demand that they're witnessing right now. With the current demand scenario, they would actually love to have more hours in the day to produce, and given the way it's panned out, it's not just pent-up demand, and he said there's definitely much more than that for PVs. Had it been only pent-up demand, it wouldn't have continued all the way from the month of May, June till September and beyond. So yes, solid comments coming in from the management of Tata Motors about PV business also witnessing a decent resurgence.
The passenger vehicle business achieving an EBITDA break-even of 1.6%. JLR continued its strong delivery of Charge Plus project of cash and cost savings. And for the first half, they've delivered 1.8 billion pounds of savings. And for this quarter, they delivered about 0.6 billion in this quarter, with about 300 million coming in just on the cost side. In India, we called out a 6,000 crore cash savings plan. This has really started gaining momentum, and we have delivered so far 2,500 crores of these savings, with 1,500 crores coming in this quarter alone. Really heartened to see a positive automotive free cash flow of 6,700 crores. And our liquidity is strong and our debt maturities are well spread out. This is a highlight of the consolidated one. On the JLR, to go a little bit into more detail, positive EBIT, positive PBT, and positive free cash flows, despite COVID-led volume decline, shows that the business is actually getting more resilient.
That's the management commentary from Tata Motors. Stock up almost 2.5%. Stepping into a break here. More updates lined up. When we come back, stay tuned.
Hello and welcome back to ET Now. You're watching Buy Now, Sell Now. It's time for the quiz to be addressed and the winners as well. Our question to you was, which of the following brokerages does not follow the low-cost broking model? Your options were 5paisa, Zerodha, Angel Broking and Motilal Oswal. The correct answer is obviously Motilal Oswal. They are not a low-cost broker entirely just yet. We have three champions who were the first three to tweet their answers to us: Tawfiq Azad, Siddhant Jajaria and Imran Khan. Congratulations to you all, a hearty one at that, and keep tweeting to us and keep participating in this quiz, which is designed to increase your knowledge of the markets. But in line with the same thought, ET Now has been putting your interest at the forefront, and Times Network's special investor education series, Nivesh Ke Fande, will share important tips daily on how to better manage your financial portfolio and also guide you by shedding more light on some important aspects of personal finance planning. On this edition, we're looking at debt funds. Let's listen in.
Today on Nivesh Ke Fande, I want to talk to you about debt mutual funds.
Yes, Mubina, most people do incorrectly believe that mutual funds invest only in equity markets or shares, as they are popularly called. But that's not true.
You're right. Debt mutual funds invest in government bonds as well as other debt securities.
And while equity mutual funds are considered to be a risky investment, some people also consider debt funds to be risky as well.
Well, actually, nothing in life is without a little risk, right? I mean, not investing your money at all is also a risk, as then your money does not grow at all.
So true. Debt funds do carry some amount of risk, but not all funds carry the same level of risk. All debt funds do carry lesser risk than equity mutual funds, but it all depends on what the debt fund that you pick is investing in.
Well, as they say, risk and return are directly correlated. So it's important to assess your risk appetite when choosing a mutual fund that suits you best.
That's all on this edition of Nivesh Ke Fande. Stay tuned for more insights on investing on the Times Network. Okay, let's move on to an ET Now story. What we're picking up from sources is that Tata are in advanced stage to buy almost 50 to 60% stake in Big Basket. Nayantara joins us with more on that. Nayantara.
This is a big ET Now exclusive that we broke late last night. Sources are indicating that Tatas are closing in on buying a big stake in the e-grocer Big Basket. It's not a big stake, actually, it's a majority stake, with sources telling me it could be as high as up to 60%. 50 to 60% is what the advanced stage of talks are on for at the moment. At this juncture, ET Now has not been able to ascertain if the Tatas would be tying up with private equity giants for this buyout. It would be an educated guess that China's Alibaba is one of the big investors looking to exit from Big Basket. It has about a 28% stake. It would be interesting to see if it completely exits or just wants to pare down its shareholding. We reached out to the Tatas. They declined to comment. We've also been told by our sources that Big Basket has been seeking a valuation of almost $2 billion. Now, the e-grocery space has seen an explosive growth since the lockdown. It's a space that already has Flipkart, Amazon, and even Reliance Industries is trying to make big waves in it. Maybe that could be one of the big reasons that Big Basket is also looking out to another giant like the Tatas to have on its side. Having said that as well, we should remind our viewers that this is not the first time that Big Basket has been holding talks to sell out. In 2017, it had held exclusivity talks. It was widely reported it was in exclusive talks with Amazon that did not fructify into an acquisition. This time round, it seems to be with the Tatas. The Tatas that are looking to make an entry into the e-commerce space, and clearly they're trying to do it with inorganic growth. In August this year, Tata Sons top boss N. Chandra talked about a super app that could go live by the end of 2020 that on one platform would have all the offerings of the various Tata Group companies. So this is the Tata's way of entering this space, explosive space, I should add, a competitive space as that. So let's see if this one does fructify into a transaction and the kind of valuations we're talking about. $2 billion is what Big Basket is seeking as valuation.
Thanks, Nayantara, for that update. With that, we're going to wrap it up right here on the show. Thank you for tuning in.